Hey everybody, Jay here. Welcome to the channel. I want to give you a quick update. It's Monday morning, April 6th, and it looks like we are, at least as far as futures are showing, we're poised for a pretty significant positive opening. You can see here the Dow, S&P, and the Nasdaq is not listed here, but they're all up in futures around 3.5%. So what that probably means for today, unless we get some sort of downturn, I'm probably not going to be buying anything today. But I wanted to take this video to share with you guys 3 stocks that I have been adding to my portfolio during this downturn. And these are stocks I did not have in my portfolio before the downturn started. Because one thing that I wanted to do with this downturn was use the sort of like just overall macro or indiscriminate selling of all equities that has happened to add some quality equities to my portfolio that may be getting unfairly sold off a bit more aggressively than they should be, because they are just simply very good businesses. And so that's what I'll talk about in today's video. The first equity that I've been adding is one that I've been wanting to add to my portfolio for a very long time, and that's Visa. And there are a couple reasons why. First of all, I really think that one of the trends that's going to emerge from this global issue that we're hitting is that I think it's going to accelerate our evolution to a cashless society. I think more and more people are going to be wary of cash because it carries viruses. I actually watched an interesting video by Kathy Wood this weekend where she talked about when a virus gets on our skin, we have antibodies, etc., that can kill that virus. Whereas when a virus gets on paper, and specifically currency or even coins, it can live there for quite a long time. And so cash is a kind of like an under the radar transfer of viruses that we may not be thinking about, that I'm sure is being bubbled up. So one of the trends she spotted as well too was that companies that are going to help facilitate a cashless society are going to be even more critical moving forward. So there's that trend. Plus, I've just always wanted to add Visa to my portfolio. Like if you look at this trend line over the last 5 years, just look at it. You haven't had many pullback opportunities to buy into Visa. So while their PE is still a little bit high at just a little under 27, and that might actually raise because they might be pulling back their earnings a bit in the short term, I'm using this opportunity to add Visa because I want to add this quality company to my portfolio, and I feel like it diversifies me a bit from all of the tech-heavy holdings that I have as well. A couple other things that are drawing me in here are the dividends. If you take a look at this, their dividend yield, bear with me while the hamster wheel spins, but you can see it's slightly above its 4-year average, which you take a look at the chart down here, that tells me I'm getting it at a relatively decent value. And if it continues to drop even more, I'm going to buy in at that dividend yield. And then I also like their dividend growth too. They are growing their dividends. Like, look at that. While it is a low overall dividend, below 1%, you have some very aggressive growth rates. So Visa is the first company that I'm adding. The second company is JP Morgan Chase. And I've been wanting to add JP Morgan Chase to my portfolio as well too. The first 2 banks that I added to my portfolio were Wells Fargo and Bank of America, and I've been happy with those, but I've always seen JP Morgan as the gold standard when it comes to banks. And you can kind of see, like Visa, you haven't had many opportunities to buy into them over the last 3 or 4 years. So look at this aggressive pullback, and it is justified to a degree because lower interest rates are going to hurt their revenues in the short term. I'm looking at this as a long-term buy. And so again, I think we're getting a nice 4.28% yield. Will it hold to that level? It might, or it might not. Frankly, in the short term, I'm not as concerned about it. It's still a great value. Typically over the last 4 years, the average has been almost 2.5, and now we're getting it at just a little under 4.3. But if you take a look at their dividend history, they've been pretty solid. They had 2 years where they brought it down to about a nickel a share during the financial crisis. But then take a look at this. They've been committed to building it back up. So because they're a bank, could we see a bit of a pullback in their short-term dividends? Sure. but I see this as a quality company who is committed to paying out their shareholders if you look at their long-term trend line. And then the third company that is brand new to my portfolio that I've been adding is Lockheed Martin. And I did a video on this recently, a couple months ago, and I'll post it in the link below, where I talked about how I'd really like to diversify my industrial holdings. 3M is the majority of my industrial holdings, and then I also have exposure to industrials through some ETFs that I own. But I like Lockheed Martin because they are so categorically entrenched into the defense spending dynamic of our society and our country. And so I see them as a very safe revenue play. So first of all, again, just looking at their chart, if you just take a look over the last year, they were really solid, and now we're getting a nice buying opportunity here. Similar over the last 5 years, while not quite as exponential growth as you have with like Visa or even JP Morgan, it is a nice solid growing company. Right now they have a nice yield at 2.74%. And if you look at how that compares, it's slightly above their 4-year average, which tells me we're getting a relatively decent value on this. But then the other thing that I like with Lockheed Martin too is take a look at their balance sheet. And again, you hear a lot of the people, the experts, who say when you're buying during these times, during these likely recessionary times, you need to look at the balance sheet. And when I look at Lockheed Martin, their cash on hand, $1.5 billion. Sure, great. But look at this, accounts receivable, almost $11.5 billion. They have a very significant back order of product from the government and other entities. It's kind of similar to how before their downfall, Boeing was always seen as such a reliable and safe company because they always had such a strong backlog of orders that they were working on. Well, that's what this number is right here for Lockheed Martin, $11.5 billion. So I see them as a very stable company. I've been buying into them around the 330s. So they're a little bit higher right now, around 350. But that being said, as we get more pullbacks, I'm going to be buying into more Lockheed Martin as well. Okay. Again, so it's Visa, JP Morgan, and Lockheed Martin. Those are the 3 new stocks I've been adding to my portfolio during the downturn. I've also been adding some of my existing holdings as well. That'll be my next video. Hope you guys are all staying safe, staying social distance, and staying invested as best you can. Thank you.